My name is Nathan Nix, Director of VA Lending here at Success Mortgage Partners, and these are 5 things you as a loan officer need to know about the VA loan. The first thing that you need to understand about the VA home loan is that it's more than just a loan. It's an earned benefit that's a part of every eligible service member's benefits package. The VA home loan was introduced through the GI Bill 1944 as part of a broader commitment to help veterans and service members achieve home ownership through serving our country. Success Mortgage Partners understands the purpose behind the program and presents it with confidence. We understand that the sacrifices that have been made for our nation, and we are proud to bring home ownership to so many that have earned this benefit. Understanding VA eligibility is so crucial. Being a veteran or a service member does not automatically mean someone's eligible for the VA loan. Eligibility is determined by several factors, including your character of service, your length of service, and the military component which they served. The requirements may differ depending on whether the borrower served on active duty, National Guard, or reserves. S&P takes the time to understand these differences before issuing out a pre-approval. Without proper reviewing of eligibility, a loan officer can promise VA financing to someone who never should have been qualified in the first place. Understanding eligibility early protects the borrower. It strengthens the pre-approval and helps prevent problems later in the transaction. Understanding VA occupancy requirements. The VA home loan is intended for veterans and service members and their families to occupy as a primary residence. It's not designed to finance investment properties. However, the VA occupancy guidelines are flexible enough to recognize the realities of military life. Active duty service members may receive orders, deploy, or you have to relocate with very little notice. In some situations, a spouse or a family member may need to occupy the home before the service members arrive. Loan officers, you need to understand the nuances of occupancy, including PCS, deployments, or spousal occupancy and delayed occupancy situations. Understanding these guidelines creates more home ownership opportunities while still keeping the loan within the intent of the VA program. Understanding residual income versus debt-to-income ratios on VA loans. One of the biggest, if not the most important difference between VA lending and other loan programs is the emphasis that is placed on residual income. Now, debt-to-income ratio only measures percentages of a borrower's monthly income being used to pay certain debts. Residual income takes a broader look at the borrower's financial profile as a whole. I like to say, what's the picture after the purchase? It considers what remains after paying debts, housing expenses, taxes, utilities, maintenance, and other obligations. So the question is not simply, can the borrower qualify with this payment? The better question is, what will the veteran and their family have left over after everything is paid? Residual income provides a more complete and in many ways stricter method of qualification. It helps ensure that the borrower is positioned for long-term success rather than being approved based solely on debt-to-income ratios. Does your company even offer a VA manual underwrite? Not every VA borrower has picture-perfect credit, and that doesn't mean automatically that they should be denied for the opportunity to purchase a home. One of the strengths of VA loans is the flexibility with the guidelines to evaluate the borrower's complete financial and credit history. At Success, we do manual underwrites like no one else. We deep dive into the full story and understand concepts such as satisfactory credit, what reestablished credit is, what compensating factors are that surround the previous credit challenges. A manual underwrite is not a dead deal. It's an opportunity to tell the complete story of a borrower's financial profile. We understand manual underwrites help more veterans achieve home ownership, and our loan officers build stronger VA pipelines because of it.